Good morning, ladies and gentlemen, and welcome to the ATS Annual Meeting of Shareholders for 2019. My name's David McCausland. I'm a fellow shareholder and I'm the chairman of the board, and I call the meeting to order. Thank you for being there. Joining me on stage are Andrew Hyder, our CEO and a director, Maria Perella, our CFO, and Stuart McQuaig, corporate vice president and general counsel, and Stuart will be the secretary of the meeting. Later on, after the formal part of the meeting, Andrew and Maria will be providing us with their presentations on the progress of the company. Before we start that formal business, I have a few personal observations on my own behalf and on behalf of the board on performance and governance. I think, as you know, the past year has been a highly productive one as ATS executed on its build, grow, and expand strategy. Proven capabilities were acquired to address new applications in life sciences and electric vehicle markets. Enabling technologies were introduced through a rigorous focus on innovation. I just met one of our young innovation people who told me he was great at innovation, so I hope that's the case. I believe it. And new and better ways of working were identified and implemented as a result of our management system known as the ATS business model. At the heart of all of this is a vigorous commitment to continuous improvement. Under Andrew's capable leadership, every member of the ATS team, now numbering over 4,400, is not only encouraged to set an ever higher standard of performance, but given the tools and framework to achieve it. For you, our fellow shareholders, the performance of the company reflects outstanding operating achievements, delivering high quality, top and bottom line growth achieved in each of the last 3 years. Last year, revenues grew 12% and EPS was up 52%. With $900 million of backlog to start the fiscal year and a robust balance sheet that is fully capable of supporting ongoing growth and investment, our foundation is stronger than ever. Your board of directors has a tremendous amount of confidence in the direction of this company. I'd like to congratulate and sincerely thank every member of the ATS team for delivering another year of record financial results and superior value creation for shareholders and customers. As a shareholder myself, I am proud of the achievements of our employees and proud to serve as your chairman. And I'm sure that applies to my colleague directors. The role of your board is to ensure that ATS has the right strategies and the right team in place to excel in a highly competitive and ever-changing market and global environment. Our CEO and senior management team continue to make great strides in building an organization that addresses the needs of customers, shareholders, and employees, while being a positive contributor to society. For our part, your board takes its obligations to all stakeholders very seriously. We are particularly focused on the fact that we are accountable to you, our shareholders, the owners of the business, and we are acutely aware of our responsibilities when it comes to the disciplined allocation of human and financial capital. I just had a very interesting discussion with one of our shareholders on the importance of disciplined capital allocation. Well, we're great believers in that at the board. Each of your directors strives to bring her or his very best to the table within the framework of excellence in governance. One of the ways we take those responsibilities seriously is by staying well informed and current on the relevant topics and the total framework affecting ATS and its ecosystems. To play an effective strategic advisory role to management and in recognition that our company is evolving as a global automation industry leader, we, the board, prioritize continuing education for ourselves. This includes hands-on experiences at ATS facilities worldwide, where we meet with and learn from employees. We also visit customer locations where we see ATS systems in action and engage with customers. All of that being said, I'd like now to introduce the other members of your board other than Andrew and myself. I will ask each director to please stand when I call your name. So in alphabetical order, we have Neil Arnold. Thank you, Neil. Joanne Firstman. Thanks, Joanne. Kirsten Lang. Thank you. Mike Martino. Thanks, Mike. And Phil Whitehead. So I thank my fellow directors for their hard work over the past year, their dedication and their availability. I urge you to vote in favor of these dedicated individuals, all of whom are incumbents. Your board, as proposed for 2020, is diverse in business experience, expertise, age, and gender, and is ready to get down to business on your behalf or to continue to do so. You'll note for the first time in a decade that I did not call the name of Darrell Wilson in introducing the board. That's because Darrell decided to step down as a director in February due to busy, demanding personal engagements. Darrell served with distinction as chair of our Human Resources Committee and as member of the Corporate Governance and Nominating Committee. During his tenure, he made many contributions and generously shared his time and expertise as a steward of our business. So on behalf of everyone at ATS, I would sincerely like to thank Darrell for his dedication. For the time being, we will be operating with 7 directors, as previously noted, but we will be giving active consideration to further recruitment. As always, we will only consider candidates whose talents and experience are complementary to what we have already, and only after extensive due diligence would an appointment be made. This approach will take time and patience, but it ensures that the board continues to add value to the business and reinforces the confidence of you, our shareholders. On a final note, our board has an open door policy for all shareholders. Should you wish to engage with me or another director, you can contact us at atsboard@atsautomation.com by mail or through Stuart's office. We sincerely appreciate your engagement. Having an interested shareholder base is very important to the success of the company and our service as directors on your behalf. We are grateful for your ongoing support and confidence. And we can go to the management presentations. So I'll turn this over first to Stuart, because he has the exciting cautionary language to read to you with respect to forward-looking financial information. This is the most important part of the meeting, so you have to listen carefully, and there'll be a test on this after.
Thanks, David. Today's oral and visual presentations will contain forward-looking statements. Actual results could differ materially from a conclusion, forecast, or projection in such forward-looking information. Certain material factors or assumptions were applied in drawing a conclusion or making a forecast or projection as reflected in the forward-looking information. Additional information about the material factors that could cause actual results to differ materially from the conclusion, forecast, or projection in the forward-looking information, and the material factors or assumptions that were applied in drawing a conclusion or making a forecast or projection as reflected in the forward-looking information are set out in the overhead and contained in ATS's filings with Canadian provincial securities regulators.
Good morning, ladies and gentlemen, and thank you for joining us today. I'm pleased to be here to report on our progress. 2019 was an exciting year for ATS as we executed our value creation strategy: build, grow, and expand. We continued to build out the ATS business model, deploying new tools and seeing clear evidence of the commitment of our people to the ABM. Financially, revenue grew 11% organically, and operating margins expanded by 90 basis points. We also deployed our balance sheet, increasing internal investment and innovation, acquiring 2 key businesses, Commissar and KMW, and purchasing the IP for rapid speed matching technology. We did this while also funding a share buyback and finishing the year with a strong balance sheet. This morning, I'm going to discuss ATS markets, growth opportunities, our strategy. Maria will then review our financial performance and governance structure. ATS is a global, diversified, billion-dollar-plus automation and technology company. We have over 4,400 highly skilled and dedicated employees across the world who are engaged and proud of the work they do as innovators and creators of advanced technology and solutions for our customers. Our global scale and presence is unique in our industry, with 23 manufacturing facilities, over 50 engineering and service offices across over 23 countries, enabling us to serve a global customer base. We deploy our technology and automation capability to transform, streamline, and optimize our customers' manufacturing operations. By doing so, we enable our customers to bring their product to market faster and more cost-effectively. Our advanced technology and unmatched track record of reliable innovation enables us to provide everything from leading automation products, such as our SuperTrack linear motion platform, to all the way to complete turnkey enterprise solutions. Along this value chain, we provide engineering, after-sales service, and digitization for a true smart factory for our customers. In other words, our value extends to the entire life cycle of manufacturing, from creating the specifications to building and maintaining the solution. We serve customers across diverse industrial segments, which are categorized into 4 key areas. First, life sciences. Second, transportation. Third, energy. And fourth, consumer. Our customers include many of the world's most successful international companies with sophisticated and complicated automation needs. And these are sizable markets with favorable dynamics. 2 years ago, we undertook a strategic review, part of which looked at the markets that we serve and identified the growth opportunities that best aligned with our capabilities. This review was instrumental in developing our plans and priorities, and since then, we've continued to review and tweak our strategies based on a disciplined understanding of our markets. But fundamentally, our focus on attractive market verticals has not changed. We are focused on life sciences, which is expected to grow and outpace automation overall. LS now represents over 50% of our business. In addition, we're focused on EV, the electrification of vehicle within transportation, nuclear within energy, and certain high-value segments of consumer, including attractive warehousing automation applications. This focused strategy has served us well, with 19% growth in order bookings last year. And as we announced yesterday, Q1 bookings were a record $423 million. Turning to our people, ATS is made up of talented and committed individuals whose abilities and passion drive our business forward. Our people are our number one asset. We have a team of highly skilled and educated technical engineers, project managers, skilled trades, and assembly people who are engaged and aligned to delivering value. Employee engagement is very important to us, and we have a number of initiatives to support this, including our global talent management program. In fact, 2 of our 8 value drivers are focused on people, and people is the first column in our ABM. That's intentional. Now turning to our financial results. Despite some uncertainty created by global trade disputes, strong momentum from fiscal 2018 continued in fiscal 19, with improved top line and bottom line performance. Order bookings increased 19%. That led to a 21% increase in backlog by the end of the year, which approximately $60 million came from acquired backlog. Our revenues were $1.25 billion, up 12% year over year. and our margin expansion program contributed to an improvement of 90 basis points. Overall, fiscal 2019 was a successful year with solid organic growth through the addition of new customers and the expansion of long-term customer relationships. This performance reflected the hard work and dedication of our people and their ongoing commitment to the ABM. Now turning to our strategy. Build, grow, and expand. It is our goal to drive long-term, sustainable shareholder value through both organic growth and acquisitions. And as a reminder, build means build on the foundation of ATS. And central to this is the ABM, our playbook for the development and application of processes and mindsets to drive continuous improvement in all aspects of our business. Growth is focused on driving organic growth through the development and implementation of growth tools under the ABM. Part of our growth initiatives including our margin expansion plans, driving year-over-year improvements that led to gains in our profitability. And finally, expand is focused on broadening our reach, including entering new markets and business platforms, expanding our service offerings, and driving innovation, making it a part of our everyday life, and making strategic and disciplined acquisitions that strengthen our business. Critical to driving sustainable long-term shareholder value is strategic capital deployment, ensuring that we are focused on making investments both internally and externally that will drive the highest level of returns for our shareholders. I'm going to spend the next few minutes expanding on some of the details of the strategy. Starting with the ABM. As a reminder, the ABM is a set of tools that enable us to pursue and evolve our strategy, to drive continuous improvement, to outpace the competition in the markets that we serve, and to support long-term sustainable value for you, our shareholders. The ABM starts with the three pillars on the left. People, having the best team and winning as a team. Next is process, aligning around a common set of policy-driven business processes that we will use to drive continuous improvement in all aspects of our business. And third, performance, constantly and consistently measuring our performance and course correcting to ensure we deliver value to our customers and shareholders. And along the top are the focus areas for the ABM. Starting with strengthen our core, having a customer-first mindset. The 8 value drivers. Next, deliver growth, customer success. Because if our customers succeed, we succeed. Focusing on our organizational talent development programs, developing our employees to meet the challenges of today and tomorrow. And the last column on the right, pursuit of excellence. First, providing long-term shareholder value. And please note that across the top is focus on customer and shareholder. That's intentional and a clear focus and priority for the ABM. The strategic planning process. This is our annual process for reviewing our strategy to ensure our value creation plans align with our aspirations. I've been encouraged by the way our people have aligned around the ABM and drive continuous improvement within our business over the last year. In fiscal 2019, our people participated in over 40 Kaizen events and over 100 problem-solving events. The ABM has gone from a corporate-led initiative to becoming ingrained in the way we do business. While I'm pleased with the progress, we're not even close to being done. As with any good continuous improvement program, the work never stops. It's always about setting the bar higher, because that's how we win. We have many, many different areas in the business where we can drive process improvement that will drive higher profitability and continued growth, leading to greater shareholder value. In terms of growth, we look at opportunities to align ourselves to our customers' needs. Life sciences is an attractive market with solid industry fundamentals, positive dynamics, and opportunities to utilize ATS technology innovations. We see life sciences as an area for growth, particularly in medical devices and pharmaceuticals. And we continue to broaden and deepen our penetration in this space. In transportation, as the market shifts investment from traditional propulsion to EV, we are well positioned with demonstrated experience and a track record of success. EV represents a considerable changeover for the transportation industry, which I expect will lead to increased market activity. Last year, we received an order for an $80 million program with a customer in the EV space. This was a new customer. This win was a testament to both our innovation, our capability, as well as our experience and value we can bring to our customers. Another area that we're targeting to expand is growth in our after-sales service offerings, an important component of post-automation capabilities. This part of our business is higher margin with reoccurring revenues and is tied to our innovation strategy. We have positive momentum in services, but we have more work to do to make this a meaningful part of our business. And we see opportunities to enter new markets. For example, food and beverage, aerospace and defense. At the bottom of the page are areas that will enable our success, starting with innovation, driving product and technology leadership to bring high levels of value to our customers. Digital growth, enabling the smart factory. Strategic M&A, targeted, disciplined acquisitions where we can add capability and drive strong financial returns. And finally, continuing our margin improvement program. As I noted, innovation is a key focus area for us. Our goal is to drive technology leadership and expand the reach and scope of our capabilities through creating innovative platforms and analytics that benefit our customers by reducing complexity, shortening development cycles, and improving production efficiencies. Well, we've moved forward on digital capabilities, so industrial Internet of Things, and other key product innovations such as cobot, vision systems, and linear movement systems. We have more work to do to drive this important aspect of our business. Overall, these efforts enable us to capture additional systems, products, service business, and value-added innovation, which address both the needs of new and existing customers globally. Moving to acquisitions. This is an important element of our growth strategy. We evaluate acquisitions based on 4 criteria. It starts with the market, then the strategic value of the target. Third, how we will integrate and operate the asset, and how quickly we can launch the ABM. And fourth, the financial return. Our approach to deploying our balance sheet will be disciplined and strategic. Timing will be variable, and we will not acquire for the sake of acquiring. In summary, our goal is to drive long-term, sustainable shareholder value. We have a solid foundation with strong bookings, record order backlog, and a healthy balance sheet that enables us to pursue our strategies. The adoption of the ABM has delivered results. We will continue to build on this momentum and create a winning culture built on continuous improvement, where we constantly seek to make tomorrow better than today. We are well positioned in strong markets. Expanding services will allow us to bring more value to our customers and capture more of their operations and maintenance spend. We have a rich history of driving innovation and a renewed focus on this important aspect of our business. We see much potential in our markets to cultivate good acquisition targets that will build on our portfolio and add value for our shareholders. And as we enter 2020, we're off to a good start with year-over-year growth in order bookings, revenues, and a record order backlog. Finally, we have a rich history. ATS has been in business for over 40 years, 26 of those being on the TSX. I'm proud and humbled to lead this truly great company with a team of over 4,400 people. In closing, I want to thank you for your attention this morning. I look forward to continuing to work with our strong, independent board of directors, our talented management teams, and our best-in-class employees in achieving our aspirations. I will now pass things over to Maria. Thank you.
Thank you, Andrew. Good morning, ladies and gentlemen, and thank you for joining us this morning. Today, I will be reviewing our fiscal 2019 financial performance. My comments will be focused on our key financial value drivers, earnings, our balance sheet, including capital structure, and governance and compliance. Fiscal 19 was a year of both organic and inorganic growth. Our key financial value drivers improved both with and without our acquired businesses. As a reminder, fiscal 19 includes 5 months of KMW and 1 month of Commissar. Starting with bookings, fiscal 2019 bookings of $1.41 billion were 19% higher than last year. Organic growth was 16%, and acquisition growth was 3%. Bookings from life sciences customers accounted for over 50% of our orders and was the growth leader among our vertical markets. On backlog, we have continued to generate consistent year-over-year growth. Fiscal 2019 ended with backlog of $904 million, a 21% increase over March of the prior year. The growth in backlog was led by strength in the life sciences and transportation end markets, which represented approximately 82% of our backlog at March 31. Our positive momentum continued in Q1. Order bookings were $423 million, up 18% from last year Q1. And we finished the quarter with a record backlog of $982 million. Moving to our revenue and margin value drivers, fiscal 2019 revenues of $1.253 billion were 12.4% higher than fiscal 18. Organic growth was 11%, which was due to higher backlog and higher order bookings throughout the year. This was our second consecutive year of double-digit organic revenue growth, following a 10% increase in fiscal 2018. Adjusted earnings from operations increased by 22% to $142.8 million in fiscal 2019, up from $117.3 million in 2018. On a margin basis, fiscal 2019 adjusted earnings from operations margin was 11.4%, up 90 basis points from 10.5% in fiscal 2018. Margin expansion was driven by our key margin improvement areas, including operating leverage, supply chain management, and our ABM. These gains were partially offset by investments in innovation, services, infrastructure, and a ramp-up of skilled resources in order to support continued revenue growth and margin expansion. Again, positive momentum has continued in Q1. Our adjusted earnings from operations margin was 11.2%, up from 10.9% in Q1 last year. Moving to working capital, our non-cash working capital as a percentage of revenue remained low at 7.1% at the end of fiscal 2019. Throughout fiscal 19, we maintained our working capital percent below 10%. This reflected a number of continuous improvement initiatives that we implemented and the ongoing shift of more of our work into life sciences, which generally has better payment terms. At the end of Q1, our non-cash working capital percent increased to 12.4%. As we have seen in our latest quarter, we do expect to see fluctuations in cash generation and working capital as a percentage of revenue, as the timing of investments and receipt of cash for work completed may not align every quarter. Now on earnings per share. In fiscal 2019, adjusted EPS was 98 cents, or 32% higher than fiscal 2018's adjusted EPS of 74 cents. The improvement in adjusted EPS reflected higher revenues and margins. We did experience some volatility in our earnings per share, primarily driven by the variability in our stock-based compensation expense, which varied from a $6.6 million expense in Q2 to a $6.3 million recovery in Q3. On a GAAP basis, our earnings per share was 76 cents in fiscal 2019, up 52% over fiscal 2018. In Q1 fiscal 2020, our adjusted EPS was 25 cents, up 14% over Q1 last year. Moving to our capital structure. We have good liquidity with cash on hand of approximately $155 million and available credit of $624 million. Our capital structure includes our $750 million primary credit facility and a fixed interest US $250 million bond that matures in 2023. Our leverage on a net debt to adjusted EBITDA basis was low throughout most of fiscal 2019 due to continued strong cash generation from our business. In the fourth quarter, our leverage increased, driven by the acquisition of Commissur, which was funded from cash on hand and increased our net debt. In the first quarter of fiscal 20, we adopted the new IFRS 16 standard for leases. The impact of the standard is to capitalize the majority of our outstanding leases with a corresponding lease liability. In Q1, this added approximately $75 million to our net debt, which corresponded to a 0.4 increase in our net debt to adjusted EBITDA ratio. Going forward, as we continue to pursue our build, grow, and expand strategy, we expect to employ moderate debt leverage. We are comfortable operating in the 2 to 2.5 times range, and because of our good cash generating ability, we are willing to peak to 3 to 4 times for a few quarters after acquisition. My final comments will be on governance and compliance. These are important aspects of our management process at ATS. We require 100% compliance on all corporate, legal, HR, IT, and financial policies, and have zero tolerance for non-compliance. Our compensation structure is designed accordingly. In summary, fiscal 2019 was a good year for ATS. We have made progress on our financial objectives, generating double-digit organic growth and 90 basis points of margin expansion for the second consecutive year. Operationally, we made good progress with the ABM and our continuous improvement initiatives. Strategically, we have continued to invest in the business in innovation and by adding capacity where required. We have also invested in acquisitions, adding 2 highly complementary businesses and technologies. Importantly, our balance sheet remains strong, and combined with our ability to generate good cash flows and available credit, we are well positioned to continue executing on our strategies. I am confident that we will deliver on our commitment to create long-term shareholder value. Now, I will turn the meeting back to our chairman. Thank you.
Thank you for your attendance today. I think this can bring the meeting to a close. We're going to have a little reception. I encourage you to stay and chat a little bit further. You can share your further observations and questions. And once again, thank you for being with us today. Greatly appreciated.
Thank you.